The Fed holds rates steady and says the economic outlook is uncertain. The U.S. Federal Reserve left interest rates unchanged at the end of its first policy meeting of the year. But what does that signal for the road ahead? Let's ask Skyler Weinand of Regan Capital. Skyler, the Fed dropped language from its prior statement saying that inflation has made progress toward the Fed's 2% goal, and now is just noting that the pace of price increases remains elevated. So what does that signal to you about how concerned the Fed is about cutting rates?
Yeah, first of all, they're looking at the data, and 3-month and 6-month averages for inflation are actually rising. Heading into the spring season, spring home buying season, they're nervous that rates stay elevated and continue to rise. So that, coupled with the new Trump administration, the 9-hour tariff war with Colombia, DeepSeek coming out, it seems like there's a lot more uncertainty today than there was 7 or 8 days ago. So they're nervous. They're more on hold and more data watching, I think, than they've ever been. And they're waiting for inflation to drop down to that 2% level and or unemployment to rise precipitously in order to move on interest rates.
Speaking of watching every data point, stocks moved lower after the Fed announcement. We've been singing this song for a long time in terms of market moves after a data point, after a Fed announcement. So how much volatility do you expect ahead from markets as they look to all these data points and whether or not it means rate cuts coming?
Right. We saw a swift move from about 4.8 on the 10-year down to about 4.5 pre-Fed move today. That's a huge move, 30 basis points. That's a good 2-3 percentage point move. And I really feel like the bond market's going to wag the tail of the stock market this year. And, it's going to determine whether or not we can break through these highs on the stock market. Add in, again, tariffs coming out on X over the weekend. You have DeepSeek, you have the AI news that's coming out. Add in, we may have seen peak earnings here. And it seems like headline after headline, I'm also seeing companies cut their workforce by 5 to 10%. So when I look out into the future, the next 12 months, there's going to be a lot more uncertainty than there was over the last 2 years, pre-Trump administration. Now, that said, rates have hit 450, 460 on the 10-year. They're not going to 7. They're not going down to 2. We're not going to see the 3-4 percentage point run up that we saw in 2022 in interest rates. So while it might be volatile, I think the volatility is going to be a little bit more muted than it was over the last few years.
Well, the 10-year did rise after the Fed announcement. So where do you see the 10-year headed? And what are some other implications of that?
Given the language they came out with today, and you saw it in Fed speak over the last couple of days, they backed away from the table, said, all right, we're not going to potentially cut in June. We're not going to do 2 cuts this year. Maybe we get 1 in. So that's where we're priced. We're priced 50-50 June, July. That December rate cut's now off the table as of post-Fed meeting. So I'm a little bit nervous that we get back up over 5%. We haven't seen that since roughly Halloween of 2023. So I'm nervous that we get there, but I can very well see us getting back to 5 handle on the 10-year and the Fed maybe getting 1 cut in this year.